Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here for NTMarkets.com with your Monday morning pre-market webcast. Okay, daily chart of the S&P 500 E-mini futures, and we made a low at 1804 quarter. Whether that's the low remains to be seen. We've bounced about 100 handles off of that, and the most interesting thing for me this week, and the thing I'm really going to be watching for, is how do the bears react to having the bulls take it up about 100 handles off of the low. Um, are they going to step back in the way they stepped back in here? We had that little move up and then we went and made lower lows. Are they going to repeat that? If they're truly in control of the tape, and there are a lot of things that make me think that they are. If they're truly in control of the tape, then you're going to see them step in. You're going to see them reassert themselves this week. Um, and break through, today's daily pivot down at 85.75, break through this week's weekly pivot down at 1868, 1870 area, establish the weekly pivot again as resistance as they did last week, and then go to work on the downside. What they may do, or what the bulls may do rather, is continue to take it up. Establish the 9-day simple moving average here as support. It was resistance last week, and make a run at the mid-band. Making a run at the mid-band doesn't do anything to invalidate the bear trend that we've been in since 2016 started. We came into 2016, we talked about 2037 to 2047 as being a key area, and whoever won that area was going to win the first move of the market. Well, the bears have done that in spades to the tune of 200 handles plus. Retracing that move to the middle Bollinger Band, the 20-day simple moving average, is nothing out of the ordinary. What's important is what happens when and if we get there. When and if we get there, if the bears turn it back, then you can continue to see this, this bearish trend, this bearish lean on the market, and that will keep us right in sell rallies mode where we are now. You could rally it all the way to the 200-day exponential moving average there up at 2020 and still maintain the bearish advantage to the market. If the bears want 2016 to be all about the bears, then this should be a year where we stay under the purple line. We haven't had a year where we stayed under the purple line for a very, very long time. What will be interesting is the reaction to the market, because eventually we will get there. I'm not saying we're getting there this week at all, but eventually over time we're going to retest the 200-day exponential moving average. And then the market on a longer term basis is going to have to decide whether it wants to be resistance or if it's going to break through. Okay. But for this week, first things first, you got the 9-day simple moving average here down in the 85-86 area. You got the daily pivot around the same. 1868 to 1870 is the weekly pivot, and winning or losing the weekly pivot is going to take care of what happens today over the next couple of days. If the bulls want to make a run, you would expect to see a bounce in that area this morning, and then some higher highs to go from there. But we're just going to take it one day at a time, because that's the best way to handle. Best way to handle these markets. If you come into it with an agenda, if you come into it with an ideology saying we have to go up, we have to go down, well, you pigeonholed yourself into one of numerous scenarios. So it's better to be flexible, control your risk, and control your size. All right, everybody have a great day. Follow us on Twitter at Princeton Trader. Check out the website. Come check out the chat room. It's a great day to start. We've got dozens of people in there getting ready to start. And so it's a great opportunity for anybody out there that's thinking about it to come on in and learn with everybody else. We think it's a great bunch of people, and we think you'll like what you find. Okay, I'll be back tomorrow morning with another webcast. Trade them well, everybody.